God. Just kind of writing out some steps for you guys. So we'll break this down piece by piece. I'll enlarge it. I know it's super small, super tiny right now. Um, all right. Can you guys hear me okay? Am I coming in fine? Let me turn this shit down. Sorry. Just got some ambient stuff going on in the background. Mic check, mic check. 1 2 1 2. My screen's coming in fine. There's no lag. Okay. I do have this one recorded. So, for whatever reason, if you need to hop off or get back on, maybe you missed a key piece or anything like that, it's going to be recorded, so you could always refer back to it. So first things first, we're going to dive right into harmonics and patterns. This is one of my edges in the sense of looking for reversals, also identifying strong points for take profits and exits. Now, one thing I have to stress to you guys is when you are trading on harmonics, understand that they are subjective, right? Especially if you're working multiple time frames. Let me shut this part off. I don't need that. If you're if you're working multiple time frames, then you could get different swing points because obviously on a lower time frame, you're going to have more swings. There's a little bit more chaos, if you will. And there's nothing wrong with taking harmonic approaches on lower time frames if you have a much larger map. And so one of the very first things that you want to do is when you're establishing a let me close this down real quick. Put that all in there. Okay. Is work from a higher time frame. In our previous class, or excuse me, previous stream, if you will, we discussed change of character, break of structure, looking for order blocks, identifying where some liquidity pools would be at, identifying what equal lows and equal highs look like, and how that could essentially be bait for money man just to take those orders. So it's important that if you have that concept down packed in the sense of structure, it'll help you identify the swing point on where they're going to be a little bit stronger, if you will. So that's why it's very risky to map out a harmonic pattern solely on lower time frames as if that's going to give you 10x. You could get a harmonic on a lower time frame. It can take you to a previous resistance or a previous support and test that, and you kind of play in between. That's your range, if you will. But if you're looking for that bigger swing, that's really where harmonics really play a big role. For the most part, when I do take harmonics on higher time frames, I can sit in that position for a minute. So a lot of you guys took the anti-butterfly that we mapped out, I believe, almost 2.5 weeks ago, maybe almost 3 weeks ago. And I'll throw up here real quick for us. The screen might look a little crazy, so let me minimize this. And let's come over to a 3-day. Nope, it wasn't a 3-day. It was a 12-hour, excuse me. The exchange I'm on is Phoenix, so this is why you're going to see less data that's on here. You may get different patterns if you're charting on Binance, if you're charting on Bybit, if you're charting on MEXC, whatever it's called. You could get somewhat slightly different patterns, but for the most part, it's going to all be in line with one another. And here we are. So I'm just going to kind of flash this so you guys get an idea, just kind of pre-program your mind into seeing what those swing highs look like, right? So when you're looking at a chart and there's nothing on here and you're just staring at this, immediately your eye should go, cool, that's my swing high because that's an extreme. This is my swing low. This is an extreme. This is a new swing high because I've actually reached above it. I didn't close above it, but this little wick right here is liquidity, still a swing for me. All right, so when you come in looking at a chart and you're starting on a higher time frame, that's really probably the best bet for you to do is bring in that data. Don't go in looking at it, something like this, and you're like, all right, cool, where are my swing points in here? Yeah, you would be able to find those, but it's not going to be as strong versus if you're looking at the whole picture. And so this is where you're looking at those big swings, right? I want a full reversal, right? I need confirmation that we hit a full reversal. So some folks that entered here on a short here, there was a different pattern that played out from this side over here, but it was actually on a long, not necessarily a short. But some folks started shorting here. And they wrote it all the way down to here. They may have exited from here. And then maybe they're looking for new entry over here just based on an OB over here. So here's what I'm getting at. I'm going to flash this again for you guys. Where is my high tech right there? Flash this off again. Just a quick recap, right? Why we identify this as a swing point, not necessarily just because it's the most extreme high. Yes, that's number one when it comes to this. Hold on, let me change this for our first step. Did I not put you on hours? Okay, sorry. Right. So this is our first step, identifying swing points. Now I showed you something that I've already used for a short, but based on where we are right now, if there's an opportunity for a long to happen, I want to give you something that's a little bit more real time versus mapping out a pattern that I've had that we've been playing for some time. And the reason why I highlighted this is because anyone that took this short, they took it over here back on July 12th. So I just want to highlight my point. When you're taking harmonic patterns, you're taking from a higher time frame, do expect to sit in those for a minute. and you're taking profits, taking partials, and then as price comes back up, obviously price hasn't even come back up to here, it hasn't even come back up to wave B. We haven't seen this in a while. The last time we were at wave B was back on the 18th of July. So we haven't seen these, but let's say someone came over here and they got up to this 1887 area or 1890, that's a reload, right? You reload there on your short. So yeah, you average down a little bit more, but you're not even hitting previous areas. And I'll start to highlight on wave B and things of that nature why they're important to me in the sense of how I'm structuring. But let's just highlight that when you are taking them on higher time frames, I would expect to use a larger margin. You can even use a lower leverage. That's completely up to your risk management. We talked about that before in previous streams, so you guys know how to understand risk management. But when you are taking those swings and you've seen price go back up and come back down, that's where you have to fall back onto your strategy of structure. Do I get a change of character on lower time frames? Okay, is that a bearish pullback? Okay, no problem. That might be an opportunity to start adding. So that's the first part, the psychology of it. I'm taking this harmonic because I anticipate to sit in this thing for a hot minute. It can be for 2 weeks, it could be 3 weeks. In this particular case, the anti-butterfly, it's approaching a month now in this case. When you go down to lower time frames, 30 minutes, 15 minutes, maybe a 5 minutes. But this is if you're doing scalps. But a 15-minute, 30-minute, 45-minute, maybe even a 90-minute. Those are my lower time frames. That's going to take me to a previous range high. I don't feel like those patterns are going to be the ones that are going to completely do a full reversal, if that makes any sense. So I'm not going to come down here to a 45, and this is actually where I started to map this out because I started to crunch this up together. Right, my perspective is I don't expect to take this to here, and then it's a full reversal, and then we start coming all the way down here. And this is where we start to highlight, or at least jump around a little bit on one of the steps. It's looking for exits. So if I'm looking for a bearish pattern, my D's on the top, my X is on the top. So X to D, that's where I'm measuring my swing highs. There's no swing high here yet because PA hasn't played out here yet. But if I was to anticipate, that's where this comes from, and I'll show you how that theory came to be. It's in my diving board. Let's get rid of this. I know. Fibs. But let's zoom in a little bit just so we can get an idea of what we're looking at here. So I'm measuring this fib from this local bottom. It's not a bottom over here, but we had a break in structure, a change in character right over here. So once I see this change in character, I know this is the new low because it's changed character. This is a low for that new change of character. I'm marking that. I'm marking that for my fib purposes, right? And then I'm just moving on up to where we came from. This was the high in this little setup right here. That's why you got to change a character right over here at 1836. So this is my high. Let me go ahead and highlight that for us real quick. I wasn't supposed to do that, but okay. Hey, this magnet. Yeah, I have weak magnets, not strong magnets. Must be like. So at any rate, I'm measuring my fib from there. I'm measuring the retracement, right? Because I want to know how far we came down to. So this is my 0. And then I'm putting the other point right here. What I'm measuring is my extension. 1874. So it's a confluence point on just where price action has been for the last, what is this, from this high right here, which was back on August 1st. So a little bit over a week now. 618 has always been a golden pocket area, if you will. It's been a strong area for whether it's support or resistance. It's just the distance from this point all the way up to here as a 618. It's going to be a good area to investigate. Coupled with that, this is why I was talking about structure. This is where you start building in the other pieces. You see the wicks? Wicks represent liquidity grabs. It can be a deep wick, that's where you get super long wicks, or it can just be something short. But what I'm getting at is, I'm measuring an order block from that body. Let's go ahead and zoom in on that because that's impossible to see. Let's get in there a little bit more. Let's bring this down. All right. They're not equal highs. Come on. Thank you. Move this over. Now let's go ahead and just extend you right. So I don't have to sit there and draw you out. And extend you right. Right, so even an entry here could be a little premature. There's still imbalance over here, so I could actually technically bring this order block down to here. An imbalance is exactly what it sounds like. There's an imbalance on these candles, right? You have a buy candle, sell candle. This little gap right in between here, that's an imbalance, right? There's somebody that's trying to take control. Bulls are trying to push price back up. We can't get it there. Shaved head with a push down, push back up with a shaved head. That is supposed to be a bullish continuation. Turns right around, liquidates anyone who said, hey, I'm going to take this entry right here. Price pushes up and then a hard push down. So everyone got liquidated right over here that was trying to enter longs right over here. Got pushed down. Then obviously you get the change in character, which would be somewhere right around here, and then further breakdown. So what I'm getting at is this is a strong area that could be contested. And if you want to go further left, you can, but this is old data. I only go left just to kind of see where we came from and how far, how big of a reaction area is this. It's decent to the left, but when we get right here, it's pretty major because we made a new low based on this high. See, if it came to right over here and just kind of, farted around and then pushed back up, well, it never made a new low from the low that it came from. That was this low right here. So I'm measuring based on these two. So I give you all of that to explain the psychology behind where am I pulling my fibs from, because my fibs are important to measure where potential waves could land. And you'll hear me say this a lot when it comes to harmonics. The when you're trying to map it out in advance, and this is where it's a more advanced technique, because you're literally saying, I'm predicting the future. I'm predicting when we're going to have a full reversal and we're going to come all the way back down to wave C. But we don't know that. It may just come down to wave B, which is going to be a strong area, and I'll touch on that in a second. But your D can be flexible. It can move. I can maybe come in a little shorter, or maybe potentially go in a little bit higher. Like that's okay. You'll still get a specific harmonic pattern. Let's take this off. And where's the writing? Did I erase that? No. Oh, there you are. Hiding from me. So just taking fibs off, not even using additional tools. I'm giving you that edge so you have a better idea as far as where I'm measuring this from, not just pulling a rabbit out of my hat. Right? Just look at a chart with nothing on it and just look at this OB that we dialed into. Yeah, there's a lot of resistance. You could potentially even go a little bit higher if you wanted to, right? Because you have equal highs right over here that never got liquidated. right? So this area could potentially be bait. That's why you would have a short stop loss here, and then see if this bad boy wants to come to here, which is if you do have a stop loss and you want a more, like if you have low leverage and maybe you just want to sit here and get in at 74, then you're good, you're Gucci. But if you're looking for that snipe shot and saying, okay, bet I want to maybe dial into in here in this area, my 618 exceeds this. When I get into this bracket of 1887, my 618 doesn't reach as high, but let's say this is my order block, and then I get a wick up to here. Remember, wicks are liquidity grabs. So they're going to come and wick up to here to, try to push out all the stops. I would be one of those people. I'm being frank with you guys. I run a high leverage. So I have, an entry at 74 and I have a couple bucks above that where I'll stop out. But then I'll have a new limit order right over here. And so if I want to dial in on this, right, to say maybe that's where my D is going to come from, same thing. So you see these wicks right here, liquidity grabs, right? Filled in an imbalance, liquidity grabs, little tiny ones, nothing major, nothing major. I have a lot of confluence in this 74 area, so I would not be shocked to saying it pushes through here, taps on here, and then comes back around and just sits here, kind of like this, for, I don't know, maybe 90 minutes or so, and then it proceeds to do its next dump. Now, there's a cheat sheet inside our group. I think you guys can see my screen. No, you guys can't see this part of my screen. So inside the class, if you go to Harmonics Patterns cheat sheet, I'll share that screen with you guys now. Expand. Let's go back to this. Bum, 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 bum. Like you entered the matrix, I know. Right in here. Right, so a quick hack, a quick way of doing this is you're going to have similarities from your measurements from X to D, B to D, B to D, like a minimum and a maximum. Like you'll have your measurements for that. What I like to do is once I have this mapped out and I know that my D is the one that can be the most flexible, and I'm looking at this saying, okay, maybe I'm at a 1.371 in that area just based on my B to D, right? This is my B. This is my B. So 1.371. This is actually a bearish pattern. It's not a bullish one, so let me change that. Quick side note: I highly recommend you guys, once you make your charts and your patterns, like save your templates, so it's already done for you. So when you're looking at a chart, you know exactly what it is. It's just a reminder for yourself, like, oh, that's bearish, oh, that's bullish. But okay, so I'm looking at my B to D. I'm at 1.371, and I'm looking here. So what's going to fit in that category, right? I have some 1.272s. These are going to be my max. Excuse me, my minimum. Forgive me, my minimum. Let me do one thing. Oh shoot, I'm not recording this part. Okay. This part is not being recorded. I have to change scenes, but you can hear my voice. So when you are watching this recording, you're going back into the classroom uh, under the education corner and you're looking for a harmonics cheat sheet. plain as that. And you'll see a whole bunch of different patterns in all their different ratios. So I'm seeing something like I could potentially have an anti-Gartley. I would have to tweak my measurements. I could have a butterfly in my hands. Shit, I could have a butterfly. I could have a cipher, butterfly, anti-butterfly. There's another anti-butterfly there. I could get a shark pattern. Like there's a couple different ideas that I can get from here. That's one way. So if something jumps out to you, you're like, oh, for sure, that's definitely a bat or whatever the case may be. Then just run with it. The name isn't as important as this. This is why I wanted a switchboard, just because it's such a headache going between screens. And OBS is such a headache because it freezes everything. That's what I do. All right, you guys can see this back on my screen, right? Let's take the silence for yes. Okay, cool. Thank you. So this pattern, I know, like right off the bat, it is a bat. That's the type of pattern it is. The reason why that stands out to me is it's just due to this leg. And I could be wrong on this. But being new to harmonics and you're looking at a cheat sheet, that could feel overwhelming because where I struggled with is I was looking for the accuracy, saying, "Oh, it has to hit this point. If not, it's not a true harmonic." And that's where you're wrong, or at least where I was wrong. Excuse me. It's certain points. You have a certain amount of distance between each other, where it's a minimum and a maximum that it can still fit within that pattern. And this is all just to identify what the name of it is, right? If I have a shark or if I have a butterfly, it's not going to say, oh, well, my shark is stronger because it's a shark pattern. Well, no, a shark pattern is the way it is just because there's usually a vertical run up, right? And then it creates that fin-like pattern. So that's why it looks like a shark, right? That's the whole significance behind harmonics is they look like something. One is not going to be stronger than the other. How strong your harmonic is solely contingent on your structure. Are you pulling your points from order blocks and liquidity pools? Or are you using a harmonic in an in-between range and anticipating that as a swing move? Where a lot of people get washed out with harmonics, or at least not understanding, is that they map them out from lower time frames and they're like, hey, I got a good pattern. And it doesn't play out because they're literally doing one of these. They're going down to like a 15-minute, and they're looking at their swing highs and swing lows from this perspective. Like, oh, that's a swing, and then going from here, and then they just get washed out. So the name isn't as relevant as it needs to be. But if you're like me and you have a little bit of OCD, there's nothing wrong with that. You like things to be just right and just have that knowledge. That's where ChatGPT comes into play. ChatGPT, if you train it the right way, you can give ChatGPT all of the ratios and then ask it to identify the ratios that you're coming up with. So I mapped this out. I looked on my chart, on my cheat sheet, I saw like 4 different patterns that this could potentially be. Because remember, RD can move. It can move around. So I don't know which one it's going to be. I don't know if it's going to be a bat. I don't know if it's going to be a shark. We don't know. We're trying to predict the future. So to make my life easy, I put this inside the classroom as well too. It's in the same area. It's a cheat sheet. If you guys have never used ChatGPT, I don't know where you've been for the last 4 months, but it's a great tool when you're just trying to figure quick things out. But I put a prompt in there for you. So if you type in that prompt and you're coming up with these ratios, you just got to look at your chart and go, okay, I have a 0.517 from X to D. I have a 1.371 from B to D. I have a 2.916 from A to C. And then I have a 0.248 from X to B. and you just ask ChatGPT, like, hey, if I have these ratios, what kind of pattern am I going to get? What kind of pattern does that create? If you just ask that up front, it's going to give you your bare bones basics, your bats, your Gartleys, maybe a cipher, and maybe a butterfly. And so if you keep asking that question and you keep getting that same harmonic pattern, you haven't trained your ChatGPT the right way. So that's why I recommend your initial prompt should put in the ratios just as a guide. Hey, ChatGPT, help me create a harmonic index or a harmonic index reader. And then once that happens, ask the next prompt. Based on the harmonics above, what pattern would these ratios fit under? Voila. Now, we talked about naming patterns, measuring ratios. You can eyeball it, use ChatGPT. Identifying if you're going bullish or bearish. Remember, if your D's at the top, you're bearish. If your D's at the bottom, you're bullish. That's the easiest way to do it. And you're identifying if you're looking at your top trend, your higher time frames, and using your structure, using your knowledge on structure, and maintaining your bias for the way that it's going. Like anybody can look at this chart, nothing else is on it, not even a harmonic, and go, okay, cool, that's bearish. That's it. It's bearish. You have to make a conscious decision at that point saying, okay, am I looking for a long somewhere over here? Because guess what? This will get tested. This will get tested. Am I looking for a long at A? Well, yeah, it got tested. It got tested a couple times, and this ended up turning into a liquidity pool. So straight up bait. I think it was 1820s. Yeah. Shit, I was even part of that because I rode it one time. I believe we took an 1820 somewhere around here. We rode it to around, yep, right around here. A lot of us full exited, and a lot of us got in at this 1841, 43 benchmark. Or was it here? No, it was over here. Right, so this turned into just a liquidity pool. Just straight up like wiping out orders. Because someone took a long here at some point, and they're like, all right, cool, I got in super low, I got in 1811, that's a good entry, and it was a good entry, and then they rode this, and if they held on, guess what, they got stopped. All right, so I have a feeling price could revisit here, and it could just do the same dance with me, but I'm more certain that it's going to reach down to wave C. And that's important when it comes to taking profits, right? So when you're taking profits, wave B, hear me. Wave B will determine how strong your pattern is. What I'm getting at is if we hit wave B and it bounces and it can't cross over that threshold, you have a weak harmonic. Meaning there's more room it's going to accumulate between wave D and wave B before it pushes back up again. And it's going to knock out all the stops, right? Let's say someone entered in a short right here, right over here, and then it just bounced around between there and 1850 something, and then just bounced around in between here. That's a weak pattern. This will get smacked. You could get, a bounce on wave D, and then, everyone putting their order here to long, and then you catch a nice wick down to somewhere around like 1836 area where we came from, where the change of character was on lower time frames. I 100% could see that happening. A wick, because it doesn't make a new low. It's not a new low. It's just flushing out all these wave Bs who are putting in their long. So I don't long wave B and I don't short wave B. Wave B is sit on your hands and you wait for it to tell you which direction it's going to go. If I get to wave B and I can't cross back up, so the difference would be, let's say I get to, we took an entry here, it came here, it did this, and then it came here, and then it came back up, but could not close Above that, on this, on this right here, if this was showing me a wick, I would have entered right here, or at least add it to my short right here. 100%. But you got to wait for that data. You can't wait for one candle to come down. Like, oh shit, this is going to come to wave C. No, it's not. I promise you, it's not going to. It's very, very unlikely that you go from wave D to wave C in a blink of an eye. Like, since I've been trading with you guys, we've had one shark pattern that's done that. One. Everything else has taken time. So wave B is important. That's essentially where I'm getting at. So depending on where the price action, what it does, this is contingent on where you take profits. Me, I like to take a certain portion out just to cover fees at wave B. If I'm uncertain about him, like, this could go right back up and right back to entry, and I'm not comfortable with that, then I would take a little bit more. And I'm looking at other indicators. For example, I'm looking at real-time stuff, so volume, right? Because volume and price action are your two tools. Man, that's a tongue twister. Two tools to give you real-time data. You have an RSI, which is technically a lagging indicator, but it gives you an idea as far as where strength and momentum is at. So if you want to just pair those two, and you guys know me, I can use a whole bunch of indicators. I'm very versed with them. Like giving you guys the simplicity behind an advanced technique, your RSI. I'm on a 12-hour on my RSI. I'm above 50. Money flow is pointing down, but it's not making a new low, so there's no divergence in that. But I got an RSI above 50. That's bullish. That's bullish. So, segue, like inside of our community, seeing everyone that's shorting like 44 or even 58, it's like money man sees that. Like they know that it's as clear as day. And I get why they're doing that, right? They're coming right over here. They're like, yeah, look, I got equal highs right here. That's resistance. That's resistance. This is resistance. I'm gonna be very frank with you guys. No, the F is not. It's not. It's a pull because you're right in the middle of this structure. Like you're smack dab right in the middle of this. That is bait. Your resistances are going to come from these higher areas, right? This has a huge imbalance. Huge imbalance. Like from here down, there's a liquidity pool. But if I were to do an order block, say right around here, from this body to this wick, puts you at 1943. So what I'm getting at is like, let's say, this D, because technically this D is right in the middle of this structure. It's right in the middle of this internal structure. The only reason why this would make sense in the internal structure is because we are already in a bearish pattern. Look at that. And they just got smoked. Told you. Look, this is in real time, guys. Look, everyone that's taking 58, 55, they're getting smoked. They're getting smoked. That's why it's key for you guys to know structure, and you'll never ever have that. Hey, can I enter here? Is it a good time for me to enter? You don't need someone to tell you that. You just go and look at your chart, look at where structure is. Am I in an internal structure, or am I a part of an external structure? If price came all the way down to here, let's say like 1500, that's a new external structure. That would be your new low. But everything else in between, you're just asking for max pain. You're just asking for it. Just because we are doing this in real time, I want to flip on a current idea. So you guys are here. You guys are getting that little extra bonus. Let's put that in here. Let's go ahead and hide this real quick. And let's come back to our diving board. Oh shit, I'm on lower time. Let's get rid of you. I knew 58. I knew 58 was going to be a problem. I knew it was just going to be bait. It's a 0.25. It's not a strong fib. These are not strong fibs. These are stronger fibs. You engrave that into your mind, guys. Engrave that into your mind. When you are using fibs, yes, it can bounce off at other areas, absolutely, but your strong points are going to be 618s, 0.5, 618s, and 0.5s. Okay, now that we see where that's going, where that's headed, we're on pace. We're on pace. Okay, let me get rid of this. Okay, so now I'm in a lower time frame. All I have right here are breakup structures, right? But I really, really need to come over here and have a hiya through here just to get a break-in structure. This thing is smoking hot though. Like, it's gonna overheat soon. 1874 would just make perfect sense just to tap it, take a break, come back and revisit. Maybe 40. That makes more sense. Right here. 33, 36. This makes more sense. But I don't have any other swings here. That's why I measured this pattern like so. Because this would give me a break of structure. I would enter this and then see if I can crack this. If I can crack that, then I might come around here. And if it comes right back up to wave B, I full exit on my long. I'm taking partials obviously on wave D whenever I hit this on my long. But like it can just go the other way. And so remember, when you're charting harmonics, remember harmonics are reversals. So this move up, I anticipate it to retrace back down. Why do I have that mindset? Just because of the bearish sentiment on a higher time frame. What if it decides to go higher, Saint? Okay, well we have plans for that too. So everyone just has to be planning for both sides. Right? We have a diving board, which is extremely bullish, and then we have an inverted head and shoulder, which I believe I'm on a 4-hour for you. So that's what I'm saying. Like if it comes to this neckline, it takes a pause, and then just wants to kind of chill around here, I'll scalp that short, reload on that long when we come down here to 1852, right? Because it's from these highs where there's liquidity down to this low. That's where I measured it from. All right, it's already pushed through this 618. And the measured rule for this one is from the head to the neckline. And then your breakout will be very similar. That would put us at, it'll put us back in the 2000s. All right, so if that doesn't play out, right, let's say this gets smoked, busts all the way through this order block and all that, and just keeps going, then I'm not entering into a short until I get to here. Because of this setup, the inverse head and shoulder. Sorry, inverse head and shoulder is not a harmonic pattern, but you guys are familiar with my style. I'm a pattern trader. I look for those patterns. And so having multiple different ideas going and then saving them, right? I save all my ideas here. So that way I can just look at a chart and go, oh shit, I know that play. That play is playing out. And it's just, boom, it's already pre-designed for me. Oops, not that one. Oh, this falling wedge was money though. Literally came right to this line, bounced off, And the measure rule for this one is 73. Just for that one. So like we have so many different patterns right now that are leading us to this inverse head and shoulder, that this pattern right here could just get smacked around, because like I said before, it's still inside the internal structure. Like a very decent, strong, nasty short would come from up here. Look at this long wick of liquidity right here. Liquidity right over here. Imbalance, imbalance, imbalance. You can see the huge imbalance right over here. Right here. Liquidity. Like longs entered, they got pushed up, and then whew, see ya. So like my order block would come from like right in this area. So saying if it pushes through your harmonic and you decide to not take a short until 2000s, would you add back on your long? Yes, I would. I would add back on my long when I come and test 73 again. Right? Because here, once I bust through here, I'm definitely going to get a break in structure. And a good tip when it comes to breaking structures, just depending on the time frame that you're working. Right now, I'm working a 45. Let me take this off. I'm working a 45, and I'm working the diving board theory. If I could just make that go away, that'd be awesome. Thank you. We can bust through that. Then I would add to my long back when we get back to 74. So I would want a break in structure. Lux Algo has a great tool for this. If you don't want to sit there and map out all your break in structures, you can just do it right here. So we only have one break in structure. So that tells me that we will get a leg up to here, which would be considered. So right now it's probably going to come up to here, fart around. We're going to get a wick up to here, 78-ish, right? It's going to flash break of structure, and then we're going to get this little dance. Once it comes up and then it can no longer make a new high, that's when you start loading your shorts if you wanted to. Like I already have this limit order, predisposed, ready to go. But my theory is like we tap, come back down. It makes it look like it's going to form a flag, right? Because it's going to go this way, equal low, and then an equal high. And I think that's going to be big. And the moment it cracks down underneath this, it liquidates all these late longs. Everyone who wants to long this, because they're seeing this, they're seeing this candle. I guarantee I can go in the chat right now. They're like, oh my God, it's not coming back down to 36. But yeah, of course it's not. Now it's too late to long. Opportunity to long was down here on these bullish order blocks. Bullish order blocks. Bullish order blocks. All right, so let's go back to object tree. Let's go back to that idea. Actually, I can run both of them. Need to take this off. And then I need to add this right here. See, then you can just start stacking ideas. I have a bullish idea, worked with a bearish idea. I feel like I fire hosed you guys. So we're gonna take this time, right? Because we went an hour into this. What kind of questions can I answer for you? The mics are open, by the way, so if you just want to speak, feel free to hop on and start talking, or if you want to type away inside the chat, you guys can do that too. Whoa, 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 what is that? Why did that move? Oh, it's a liquidation. Okay. This needs to all be locked. Why aren't you locked?
don't have a question, but 34 and 3 is pretty solid.
Yeah, so I found that right over here. I was working 45, and then I saw we had a push up. Then we had what looks like a head fake, like a gravestone doji. But the problem is that it's in the middle of this range. It's actually not at the height. So I would
Yeah.
anticipate most retail would say, "Oh shit, uh, gravestone doji, enter in short. You got a short sale. Then you got a hard stop right here." So my theory was, I'm in an uptrend. I told myself at 1834.63, I think it was, and it literally came right to it and took it. I just worked this little area right here, and think I broke it down even on a 15-minute. Yeah, I needed a 15-minute and 5-minute for confirmation because look, we got a break of structure, push up, which is another break of structure through here, but we came back down, which is fine because on a uh 15-minute, no, it wasn't a 15-minute, it was a 45-minute, we flashed a change of character right over here, right here, right at 36. And I was like, all right, bet it's going to push up. And then whenever it comes back down, whatever it comes back down to, that's going to be our pullback. So you use the lower time frames to really narrow that down. And if I can come down to the 5-minute, yeah, this is what I was working. I was working this 5-minute, right? Because it's easier for me to make the uptrend line. You see these bottoms right here, like how these are unmitigated. Like there's nothing that happened on the bottom of these.
And there's no like symmetry.
Nothing. There's yeah, and there's no wicks. There's no
There's no wick.
wicks. That this right here, this is money man. This is money man. And I told myself, I was like, ah, perfect. That's where I'm taking entry right around here. And look, imbalance again, imbalance again. So it's not difficult looking for snipe shots once you understand structure. Once you can identify where structure is coming from. Big pullback on 5-minute. Interesting. Interesting. 69, 70. Yeah. I really think this order block can get hit. It's got way too much confluence in this area. Yes, it's in the middle of the range. Yeah. So let me take this off real quick. All right. So any questions from anybody? I saw. Yeah, Susan. This will be recorded. It's in 4K, so it'll take a little while to upload, like maybe like an hour or two. But as soon as I'm done here, I literally upload into YouTube and then I'll post a link. Yeah. So let me go back to this. Let me take my diving board off real quick. So my X, this is my, I had a, hold on. We hit an extreme high. We had a change of character, break of structure, came all the way back down. This is the first new high. So a new change of structure with a, excuse me, change of character with a break of structure. This is considered a high inside this. Inside there. So I'm inside. This is now becomes an internal structure. So this is my first high. So this is where my X comes from. So that's why I'm marking that out from there. We had a breakdown. Remember, we're looking for extreme lows. This is the most extreme low from this high. Yeah, I could have used A here, and that's where it's subjective, but I don't get anything when I move my A there. Like this A to C, that it's too long, it's too far. So I just tweaked it and moved it in a little bit. Sometimes it doesn't even have to be on that wick. Sometimes it could be on the body, right? You gotta learn to you just play around with that and go, okay, what the hell does that look like? As long as you can identify your swing points, swing high, right? Because I'm measuring swing high to swing low to measure something bearish. If I'm trying to measure something bullish, I'm measuring from a swing low to a swing high. X would be on the bottom. X and D would be on the bottom if it was bullish. But X and D is on the top, it's bearish. Does that answer? Yes? Okay, cool. One thing when it comes to some of you guys know this, but when it comes to wave C, right? This is a little bit too much for me. Hold on. Like wave C, for the most part, you'll see a huge reaction because wave C, whether it's bearish or bullish, it's usually your furthest wave. It's your longest wave. That's what I'm getting at. Next to D. D can also be a long wave, but C is like right there. It's right up there. It's the second high, or in this case, it's the second low. So what I'm trying to drive home here is that if people set their limit orders for 1823 while this thing is on its wave down, there's a higher probability that this gets liquidated and it moves down to wave C. And equally true on wave C, folks that hey, it keeps going down, let's enter in short here, they will get liquidated. There's usually a big reaction here, a pause, if you will, and then price starts to move back up. So for the most part, the reason I say that is I usually have a heavier exit, like 75 to 85% here, and then I just leave a runner. And at this point, once I get to wave C, I start hunting for longs. Right? Leave my runner going in case my runner says, hey, you know what? We're just going to keep going. Like a good example of that would be this wick, like this wave C. Like, guys, this went from this one kind of pissed me off. I'm not gonna lie. It went from 1863 to 1769, literally just shy of like 100 pips in less than 45 minutes. So you can get fast moves. That's what I'm getting at. Like it can come right over here and then just keep coming right back down. And so this, again, just talking about structure and going over that stuff. Like there's imbalance through here, right? So there's I'll give you guys this extra, right? Give you guys a little bit extra. Um, right. So go to a higher time frame. That's a breaking structure right there. We need to get above this to have a true breaking structure. And this has room to come all the way up to here and test this trend line, which is 71. So just there's imbalance to be filled, right? So if it doesn't want to fill this bottom side, which it's touched on this trend line a couple times, it probably wants to come and fill the imbalance to the upside, which there's a huge imbalance right over here, which is in the 2000 benchmarks, right? This first one's at 2013, and then you have another imbalance around 2116. But short term wise, I mean, we could fill this imbalance. All this, like just get some action right in here. test, fill, test, fill. Sorry, that last piece wasn't supposed to be that long. It's delay. All right, so if we get a pump, nice juicy pump, we get back up to the 1990s, 1950s, if you will, which still makes the anti-butterfly valid because the anti-butterfly came from the 2000s. So as long as we don't break a new high, then we still go to the downside because remember we have a change of character right over here. Right, so we would have to clip above this, meaning we need a close. 1885, a close. I'm now double thinking if I need to move my limit orders, but I shouldn't because I have imbalance right here, huge imbalance right here. So this puts me at 72. No, I'm fine with it. 74. I'd probably move my stop loss like 86. That's where I would move my stop loss to. Excuse me, 1888.63. Because all these little wicks right here are liquidity grabs, liquidity grabs, liquidity grabs. And this bad boy may want to do the same thing, come all the way up to here, and then if it comes back down and holds this 1845 area, it's a full breakout. The next move should be another leg, and the next leg should be a change of character. Change of character, then you'll get a pullback, and then you'll get the move back up. So then this would play out. So it would fill this imbalance. Remember, gaps, holes, things that make like weird looking shapes, these are imbalances. So when you scroll back and you look, this is filled because look, we went up and it created this little gap of area, but then price came right back down. You see these strong candles? It fills this whole thing. It's filled. This is partially filled in my opinion because we had a wick that came here, but we still don't have any bodies that have come over here. This is a bigger one, right? Sub 1620. This is, I mean, we come back down to here and we would have to fill this over here, fill this imbalance right down to here. And so it's important to just have your structures when you're starting to think about your harmonics, right? If you're on a lower time frame and you want to scalp something and you can find swing highs and swing lows, just know that it's going to be a short-term play. You're not going to sit in that thing for 2-3 weeks because wherever your entry was, more likely it's going to be retested again. It is. Okay, a lot of us took like an 1803, 1805 entry, and that is a awesome entry. At some point, it will be tested again. My theory would be it would be somewhere probably like in the next 3 weeks, maybe 4 weeks, if price action decides to just stay under the 74 area. We'll revisit it if you will. At first I have a hard time switching my bias at the side shorts. I would change my bias to be a game mode and dollar short before switch gears. So, to answer your question, Ryan, the best way to answer should I be bearish or bullish here is you use your higher time frames because that's going to give you your main directional sentiment. If you're using a lower time frame, it's hard to pinpoint, am I bearish or am I bullish? Because you look at something like this, you're like, yeah, that's a vertical run up. This is hella bullish because we see this move, but then you come here to like a 24 hour and you're like, okay, well, I mean, it's technically not bullish because we're on a decline. Remember, this is our external structure. This is our part of our external structure, and we're like literally in between the range. And which direction is it going? That range is heading down. So I'm if I'm trying to get an entry that's like a snipe shot, right? Because there's safe entries and then there's snipe shot entries, you just start mapping out your support areas. And remember, these can be liquidated, right? Because the fact that price comes right here to this point, stops, and then goes right back up, just tells you that this is money man that's involved in this. They're coming right to this point, stopping, coming right to this point and stopping. So this line is acting as a form of support. So if I'm looking at my structure going, okay, this is bearish, but at some point, price has to make a move. Price has to start changing. What is going to be my best opportunity for me to enter into a trade? I like this trend line. I'm going to enter on this trend line. Whenever it hits this trend line, I'm going to enter into it. That would be your bullish sentiment. And then I'm going to hold on to it until it shows me weakness that it starts to break down. And that you determine your weakness, RSI. And I'm on a higher time frame. Right? So on a higher time frame, my RSI right now just broke over 50 on a 24-hour time frame. That could be a tease. It could be a fake out because look, it's done it before. It's peaked above it and then fucking crashed, and then struggled to get over it and then crash. Struggled to get over it and then crash. Like this is the first time in a long time since July 22nd that it's sort of remotely peaked over the 50 line. So you just got to be careful with that, right? Then I'll start working a slightly lower time frame, like maybe a 4-hour. Let's check out what that looks like. So now I'm approaching overbought on a 4-hour. So my speculation would be it's going to look something like this. It's going to hit this and then it's going to retrace. Come back to our chart. Let's open you up a little bit more. Can I open you up a little bit more? Oh my gosh. Okay. And then let's match this with price action. Right over here. Yep. So this candle right here came up to this trend line and then retraced. Next time we touched it was right over here on this candle. Came right to that trend line and retraced. Same thing with this one. Came close, then broke down. This is the first time that we are actually over the 50 line on an RSI and we're breaking this trend line. The rule of thumb would be wait for the next candle for confirmation. For me to sit there and say, hey, close all your shorts, we're going bully now, and we're going to go hit 1950, that would be premature. I need to see what that next, which is the next day, what that next day candle looks like to make sure I'm not being head faked. And so we were more likely to get a close around something around this, 74, 67, somewhere in that ballpark. And let's say the next candle opens and it has a hard retrace back down. I want to see it test this 33 area, which is right on top of this trend line. That might be hard to see. I can probably see it better on my side. Right? I want to see this open. Open to the downside, bounce, and then play right into this. That's what we're looking for. Come and test this line right here, which is, it's not necessarily just the trend line that we're breaking out of because we have a strong candle, but it's also where we're going to have some order blocks. We have a couple fibs in this area too. And if that was the case, I would completely kill any short that I would have that's in this area. Let's say I don't even hit that area. We open up the next day, we come back down here to this 33 and we hold and then we push back up. I would kill my short. Because my thesis is this is a breakout. This is a breakout. And then look to short something like this, or yeah, this might help you guys. This is where I use a parallel channel because remember, liquidity grabs are wicks. So just use a channel. No, no, no. Thank you. Okay, so this kind of just gives you a little bit of extra going. Okay, well, it could hit here, right? Because there's order blocks, but where is there going to be a liquidity grab? Well, there'll probably be a liquidity grab somewhere around here. And this trend is bearish. So it fills this gap, fills this void right over here. We get some change in structures. We possibly get a break in. We won't get a break in structure. We'll just get a change in character. No break in structure because if it booms out of here, then it's break of structure. It literally decimates this structure. So it puts in a break of structure, and then if that's the case, then it's going to go fill this imbalance, fill here, and then fill up here. And then you look to short somewhere over here, 2100s. And again, you got to go use, you're using volume and you're using just price action along with RSI. If I could find volume, that'd be great. There we go. I'm on a 24-hour, and it's not the strongest volume. $88. Yeah, I mean, we need to tick that up if we're going to go higher, but we also do need to take a little bit of a break before we can get another another leg. So we're getting some imbalance right over here. There's that same trend line. Not afraid of that trend line. Let's come back here. What else could I answer for you guys? Anything else? Brain fart. There we go. Am I leaving my mic? Decent volume here. That looks like shit volume for bears. Yeah, heavily oversold. I mean, overbought heavily. Brain fart, brain fart, brain fart. Volume. Yeah, we're at 64 on RSI. That's pretty hot, but that's okay. As long as it stays above 50, then we're good. Like for strength wise. So, bears want to take and bulls want to take a break. Just kind of chill out. Just maintain this area. I think they want to maintain above 41. Let's look at some EMAs. Yeah. I mean, that deep separation, when you have deep separation like that and your price action is literally coming up to one of the EMAs, touching and going, this is a short EMA. It's an 8 day. I mean, this looks like it's just going straight vertical. I need to move my stop loss for that one. Yeah, no worries. So let me take my tools off. Um, I actually had a class for this, but I'll sneak a portion of that. I haven't done the class yet. Just setting up your toolbox. Um, so let's open this up. Drawings panel. So on the left hand side, you have all your tools that you can use, and then on the very bottom, like this little star. Oh my gosh, this little star right here will give you your toolbar, the floating one. You can move it around, so it's easier for you to use. I just keep it down here, just make it easy. And then you can come over here to your tools per se, and then start adding stars to the ones that you want to keep in your toolbar. There's an info line that I use because like if I'm measuring something and I want to know like what's the price difference from one point to the next, or how many bars is it from one point to the other, I'll use that one. But it doesn't really matter which one you're using. If you use an info line or a trend line, the info line just does that. It gives you more information, so that's why I use it more. Make yourself a line, just open it up, and then you'll see your little toolbar for that trend line, and you click on this little template, little plus sign, and then you can save drawing as. So then you save it as whatever you want. So design whatever it is. Let's say this is a support line for you, right? Come over to your text and put support, and that's what you wanted to say. Where do you want it to say it? If it's bullish support, maybe you put it on top. Visibility, I make sure it's on all of them, so that way when I use it in the future, and I am on a higher time frame or lower time frame, it doesn't put it on there, but makes it invisible because it thinks that it can only be on certain time frames. So make sure that these are all activated, because if it's not, then you'll do it and you're like, yo, I just put it on there, where is it? Then you have to go into your object tree, open it up, and then enable that visibility, and you would have to do that every single time you use that template. So make sure when you're setting your visibility, make sure all the time frames can see it, and then you can fine tune it once you actually make it. So like if you're using it on a lower time frame, but you're also looking back at daily, it can become distracting having little tiny lines. You're like, what the hell is that? So label it whatever you want. Let me go back to this support strong. Or no, let's just go key level, right? Because I haven't made it a key level. Key level, and let's say key level for me is going to be white's fine, but let's go dashed. There you go. And I'll just do this, save template, and hit key levels. And it's just kind of rinse and repeat for the other tools that I'll use. So like I use a box, right? Because this is what's going to help me measure my order blocks, my liquidity pools, all that stuff, and then I color coordinate them. So I come here and I say, okay, I want this to be a bearish order block. So anytime I see it, I know that it's going to be bearish. Use whatever colors you like. I like bright colors. Sue me. And then you do the same thing. Like, so for me, I have bearish liquidity pools, bearish order block, bullish order block, buyer liquidity, and then I have ranges. So if I have a bearish order block, boom, it already puts OB and the two little bears in there for me. Same thing for buyer liquidity, boom, liquidity. So fib, same thing for a fib, right? So I come over here, I have a 0.50 where it literally just measures the 0.50. and then I have, my full blown fib, which I call as my vapor fib because the color. So when I map it out, there's my fib. And so it's just easier way to navigate and use certain tools versus the same thing even for text, right? So like even on text, like if I know I have an imbalance area, I just type that, hit the little T for text, type imbalance, and then just click. Boom. It's there. Okay. So I don't have to go and type it out and all that stuff. Same thing for GYB candles if I'm tracking GYBs. I use curve, multiple reasons. Sometimes it's to troll myself, but curves also help for like scallops. So this is it's kind of like a scallop move. And it would actually come from these bodies. And so that's a scallop move if I'm using that, and it's important for me because if I'm using a trend line, sometimes it's not just a straight trend line because like I can do a trend line here, but then it kind of gets funky here. So do I measure from here to here? Like what happens to all this space here? So I use that, and that kind of gives me a clue that, hey, you might have some imbalance right here. That's okay. Just hit that. Just come over here and just hit imbalance. Right? So just kind of pointing that out. This had imbalance. It obviously just got filled with all this. Right? So this is now filling this imbalance over here, over here. It's got to keep going up, though. To be honest with you, it hasn't even touched these order blocks. There's nothing here. Like right where this touched, right where this, I don't know where this liquidity grab is coming from. Like why we're getting a long wick here, outside of it being bait for shorts. There's nothing here. Yeah, you have some imbalances that are right over here in this area, but you got like this whole area over here that has to be touched. So the only thing that I can logically say is that it's going to try to fill some imbalance. From here to here. Right? This whole move is trying to fill this imbalance, but then that leaves this whole area here as one big ginormous liquidity pool, and that's not accurate. So they're pushing here. So what I'm getting at is that this is a head game right here. The operative word is like I don't know if you guys have kids, but when a baby's supposed to be born, they sometimes they need to induce the mother in order for labor to actually go into play. And so this is where you would call it seller inducement. They're trying to entice sellers to enter so that way we can create liquidity. We cannot go up any higher if we don't have liquidity to pull from. We will hit a wall, we'll run stagnant, and then we can't move. So we have to be able to push the price, get sellers to come in, collect those orders, and then, let's say retail, they have a stop loss like right above this. Go and collect that. And then somebody's being ridiculous enough to say, okay, I lost that one, I'm going to enter it right here. And then they just keep going. And they come and collect all the way up to here. And then nobody enters. That's what happens. And then this thing just skyrockets. And then when they start to see a lot of buyers come in, they're like, all right, cool, we're going to go the other way now. This is exactly how it is. Their job is not to make profit on leverage. Their job is to make profits on collecting orders. Yep, no worries, no worries. Thanks for coming, Ben. All right, anybody got anything you want to add or questions on? Was this the information you guys were looking for in regards to harmonics? Somebody drop me a thumbs up or give me a yes. Or...
Yeah, this is good. I didn't know about the test.
Yeah, it's a good tool to use. I mean, you can even use ChatGPT to help you create a Pine script for harmonics. I've been working on that for a minute now, but the tool that I needed to pull from, it just keeps giving me errors. So, but yeah, it's a, I mean, it's a powerful tool if you're just uh, yeah. I made a prompt for it, and I was just like, oh, this is so much easier than me going flipping through a cheat sheet than and trying to find something, the specific name versus let me get the like the bare bones of it, what it could be, and then kind of go from there. Because like a bat and a butterfly, they do look similar. The main difference is that like an X on a bat is going to be a little bit more pointed versus a butterfly. It's a little bit more broad. But then the same thing goes for a butterfly and a Navarro. They look almost the same except for wave B on a Navarro is more lower, like flat versus wave B on a butterfly. It's like right in the middle. It makes it look like a perfect butterfly. So sometimes you're looking and you're like, damn, what is that? And instead of me trying to figure that crap out, I'm like, all right, someone point me in the right direction on what this pattern is, and then let me go and further investigate and make sure that it's accurate. So even though you get that information from ChatGPT, I would still use the cheat sheet, right? Do your due diligence and be like,
Yeah,
all right, it could probably be this as well too.
yeah, that's what like. A lot of people ask me questions. Like, you know, so like I get them like always picking for like your idea.
100%, bro. Um,
That's dope. I'm definitely gonna check out the
oh, and I probably should mention the actual tool to chart your harmonics. I use the XABCD tool. So come over to your drawings panel. I already have it added to my favorites, but it's the one, two, three, fourth box down. You click the little arrow, and then you'll see all the different types of tools that you can use for patterns. Head and shoulders is in there. ABCD, triangle pattern, cipher pattern. Cipher is the exact same thing as XABCD. So I just use XABCD. Okay. And then save it to your toolbox. Um, Price range for measured distance, right? So you can just get an idea of how far that move is going to be, right? It's just good for tracking. Like, actually, I did it over here. Uh, structure real quick. I did on the diving board. Yeah, it was on the diving board. Whoops. I just wish they gave you command keys to make things hide, like one specific item versus make everything hide. My only gripe with trading view. Okay, so the measuring tools is great for knowing how much of a distance. So we have this pump up, which should be roughly around like 2.2%. And then we should retrace some of that back around 1.85 and then pump back up to 2.2 and then beyond. So it just gives you an idea of how much percentage change you'll see in the market where that would make sense to call that, okay, this is a correction. This is not a dump. This is a correction. And then this pump back up, it wouldn't technically be a pump. It would technically be a imbalance fill. It's when it surpasses as and keeps going. That's when it's a pump. All the market is doing is just correcting itself. That's it. It's filling in imbalance right now, and then it's correcting itself. I think we have further correction to the downside. but just based on where we are right now, we could fill the imbalance to the top, and then it would be very bloody on the way down. And it could be vice
Yeah.
versa, right? Like we could, on the next day open, which is tomorrow, come back down to that trend line that we were talking about, and then it proceeds to go back down further, fill the imbalance down to like 1620s, maybe even 1400s, and then just moonshot all the way back up to like 2200 plus. Right, so it's just a matter of figuring out. Yeah,
What's the supply of like exchanges really low, so speculation?
yeah. This move right here, this looks like a head fake. I don't understand why there's liquidity grabs here. There's nothing here, guys. Like, yeah, there's imbalance right here, but that's not even a structural high. They're pulling from here. It's yeah, that doesn't make sense. It's the liquidity grab should be up here, not here.
Even like the buy that
Yeah, this is a vertical run up. Now vertical run ups. One thing we should measure. Am I measured to the top up here? So let me take a different fib, because on a vertical run up, let's say I do get to 618. Let me change this to vape. Okay. Um, I could actually retrace back down to 1846, and this could be a flag, right? So, like, I have my expectations are that we would retrace back down to here because it's the 0.50, it's the halfway benchmark from that move. But let's just say we get front ran and it goes here, then this would be a flag setup, because usually a vertical run up will have a retracement of anywhere between 0.5 to 618, 60% to 50% retracement before moving back up again. So we go and create the liquidity grabs over here, like late longs that are coming in right here. They're gonna get that little bit of love, and then boom, hammer, create that liquidity, distribution right in this area, flush down. Everyone thinks it's gonna go down to the ground, 618, and then we get front ran. So instead of it bouncing from here, it bounced from here, which would still be a change of character where I mapped out before, and then moved right back up. Except this would be a little bit higher. This would probably be, instead of starting from here, it'd be here. And instead of closing my short here, I'd close my short here. So instead of 1% gain, which you can make a lot of effing money on a 1% move on a 74x leverage, I would go to here, which is still in the 1.4% move.
Yeah, even like areas that we have mapped of like interests that usually shows resistance, like even scalping like a 5, 6, 7 pip move, like
Look at that. That's crazy, bro. Look at that, man. That's crazy. They're literally squeezing the shit out of those stop losses. That's what this is right here. They're squeezing the hell out of them. I mean, if this thing booms right out of it, it's okay. Yeah, there it goes. It's gonna try to hammer. Yeah. If it doesn't hammer, like if it clips above this, because it hasn't even changed from its open yet. Yeah. See, it's a flat head. So I mean, give me 1861.67. I'm fine with that. But if it goes like 1861, and it closes like right where it is like right now, I mean that's maybe a little bit higher, like right there. That's a doji. Yeah, that's gonna be a doji. That could be bait. 100% bait. All right.
Yeah, I'm not convinced that we don't go higher. Like even on the lower time frame, there's a massive pullback, but we didn't create any low.
Yeah, we haven't
On
broken.
the
We haven't had change of character or any of that. So like even on a 15-minute.
just keep letting the long print.
Yeah.
Makes it so much easier.
Yeah, and the hedges help. So I mean, they're gonna help with um, stop. So even if I enter here and it keeps going, I may burn like $60, but my long is gonna make up for that.
Yeah.
Um, all right, cool. I'm gonna go get something to eat. I'm starving. I've literally been talking for 2 hours straight, which I have no problem doing, love doing, but I've worked myself up an appetite.
Okay, man.
I'm gonna
I
get some
appreciate it.
Yeah, no doubt, no doubt. Like I said, I will put this recording inside the class, so when it's ready to go, you guys can just thumb back through it. But if any questions arise, you know, hey, I was watching your video, or I remember what you said. Can you touch on that again? Just throw it in the class chat, and I'll be happy to answer it for you.
Cool.
All right, guys.
See you later.
See you later.